Hey guys, this is Leo. I'm going to be giving an update on AMC. I've kind of been out of pocket the last couple of days. I just got a new puppy who's 9 weeks old, so you might hear him whimper or bark in the background. He hasn't been barking too much, but I've been kind of just taking care of him, getting him used to the place here, new to him at least. But so we're going to go ahead and dive in. Just keep in mind, nothing I say is financial advice. I'm not a financial advisor. So, I do encourage you to go back and take a look at the video up here, the last update I gave on AMC, kind of give you an idea of where we are. I haven't really changed anything here. We're still looking at the ending diagonal count. If anything, it's looking more likely that this is the valid count. So let's go ahead and dig in. Um, So if you recall, this right here is the low volume node on the daily chart. So if we zoom out one day, uh, you can see how on the volume here, it just drops off. So you have all your price acceptance within this range of what we've done most recently. But then if we go back in time, we can see how price has previously been accepted here. That's why we are that's why we have so much trouble getting through that area. As you can see, we've come down, tested once, twice, three, four times, and now we've bounced back up. So this is this is what I'm talking about whenever I say these low volume nodes on the volume profile. This is showing an area of lack of price acceptance. Whenever price gets there, it's either going to reject immediately because there's nobody willing to trade at those prices, or what's going to happen is if it does break into that low volume area, it will move very quickly down until it gets to the next area of high volume node where it has more price acceptance, where people are willing to trade there. So as you can see up here, we have this area of price acceptance. And if we come over to the left, we can see it traded here quite a bit. People accepted the price. And so then once it broke down, we moved down fairly quickly because there wasn't as much price acceptance on the volume profile. So that's kind of what we're running into here. We also have a larger 50 if we're looking at the algos. So we come over here, pull up our algo. 7730 and nope, that's where was it? I think it was, that's the one. So right there, we can take a look and we can see that, well, remember how these algorithms work. These are the computers that big institutions use to trade on all time frames. So they act like Russian dolls in that you have smaller measured moves within smaller measured moves. So, if they start to buy here when it goes up, and it comes back to this 50, they're going to begin buying. They'll continue to buy down. So we know that these algorithms kick in here and they start buying. Because you have to remember, it's not just the bearish hedge funds that are at play here. You have other institutions that are getting long on AMC, and these algorithms are what they use to track the markets and to determine where they want to buy in at. So go ahead and get rid of that. Don't really need that here. So let's just kind of dig in here a little bit closer and see where we are. So as you can see, I have an ending diagonal set up here on the chart. And for pattern traders, this would be a, what do they call it? I think they call it a falling wedge. But to me, the correct terminology would be an ending diagonal. And those can only happen in the, you get them in the fifth wave and you get them as a C wave in an ABC correction. But here it's as the fifth. So you have your first wave, you get your retracement, so you get a 1, 2, 3, 4, and then we go down to the fifth, right? So this would be the first of the fifth of the ending diagonal. Now the wave structure in an ending diagonal has to be ABCs. The last video I explained my rationale as to why this one is not appearing like an ABC structure, but we do get ABC, A, B, C, A, B, C. And now this looks very impulsive. Notice that the B wave is a corrective, right? So you have an impulsive wave for the A, you have a corrective wave for the B. That's going to be your slower, choppy sideways consolidation type pattern. And then your C leg is your impulsive leg. So that comes down, and that's always like that. So if you notice here, you have your impulse wave for your A, a little bit of correction, kind of chop sideways, and then we go up for the C. And now this is impulsive wave down. So now we're correcting this move. So now what I would be looking for is a C leg to come down to finish the ending diagonal. Is it possible we finished it? Sure, anything's possible. I don't think it's likely considering just this structure. This doesn't look impulsive to me. This looks, if you just come back here, look at if you're into fractal patterns at all, you can come over here. You see, okay, well, you got an impulse leg down, and now you have this slower, choppy action. And then what preceded that was the sell-off. So if you come down here, you see your impulse wave down, moves back up, and then so for Monday, I can't say for a fact that it's going to go down. It could chop sideways for a couple more days and then go down. What I'm telling you is that it's most likely we have one last push down to finish out the ending diagonal, and then it's over, or at least the correction is over, and we go up. We launch. That would be the end for this count. So let's go ahead and take the algos into effect here and see where they're at. So we can see, okay, well, it's sold there, right? We know they got their target, the negative 236. So I'm gonna go ahead and pull down because I can already tell that this is exactly what they did. So now it went right to that 50. People keep telling me, oh, well, you can't look at, you can't do technical analysis on AMC. The line is fake. It's all simulation. Bullshit. Look at that. Goes right to the 50. I'm able to see these algorithms. I'm able to track what they do, and I know exactly what's happening. They're coming right up to the 50, and it goes down. And now guess what they've done? So we're going to go from here. Remember, they act like Russian dolls, so smaller ones in the larger moves. Pulling down, boom, right there. They start to sell at the 50, continue to sell all the way till you get to the golden zone, 618, and then we get to move off. It doesn't necessarily mean that it's going to be able to succeed in pushing it down, but we're getting the reaction. The computers are programmed to engage at those levels. So, and it'll oftentimes, a lot of scalpers, what they'll do is they'll scalp these levels. It'll come right up to where they're thinking that it's going to come up to, get a little bit more confluence with some trend lines or volume profile, and they scalp out just percent or so, or whatever it is they're targeting. But what they're fighting here is if you come in, they're fighting the long side algos. No, the line's fake, price is fake, oh, that doesn't work at all. Oh, wait, actually it does work. So all the people sitting there saying that, oh, you can't do technical analysis on AMC, they don't know what they're talking about. Yeah, they can, and what it stems from is a lot of technical analysis gurus on YouTube that just don't know what the heck they're doing. Sorry, they don't. They watch a few YouTube videos and they decide they're going to become a YouTube guru for technical analysis. They open up their little Discord server and sell it for $30 a month or whatever they're selling, and they don't have a clue what they're doing. I really don't have any interest in doing any of that, teaching or any of that. I make all my money from trading. This is more so just, it helps me to journal. It helps me to reiterate things that I already know, reinforce my trading habits and whatnot. So this is for my benefit, going through these little reviews to improve my skills as a trader and to keep them sharp. Because the way I learn is if I explain things to somebody and I'm teaching, it helps me to keep my skills sharp. And that's why I'm doing this. I don't really have any interest in actually teaching through a course. Mostly I just want to do my video reviews. And the AMC seems to be what people are very interested in right now. So that's why I'm doing AMC. But anyway, so what they'll do then is they'll take a series, right? So what they'll do is they'll come down here to the 50, they'll buy. Remember this last move, they came down, they bought the 50, they ran up to the negative 236, they hit their target. It doesn't necessarily have to stop at the negative 236. It can go through it. And that's whenever you can get into extended or expanded measured moves. But what they're going to do, if it just slightly goes past it, more often than not, you'll start where they bought, they'll pull up to the new high, and boom. Look at that. TA doesn't work at all. Nope. Well, maybe if you're just following an RSI or some lagging indicator and you don't know how to do TA, it doesn't work. But it absolutely works if you know what you're doing. I've made a very good living doing technical analysis for many years now, and it works. It works to a scary degree when you know what you're doing and how to track these larger institutions. And the whole point of this is being able to piggyback on what the big money is doing. So if you're able to come in here and see what those institution level computers are doing, right? So if they're looking to sell here, well, I can hop in and I can piggyback on their entry and I can write it down with them because the big money is what's moving the market, right? So if I'm able to identify where they're getting in at, that means that I'm able to just hop on their back and write it into profits with them. Anyway, so what they're doing then after this is, of course, they've, even though it hasn't gotten to the negative 236, remember you can have a smaller measured move within this one. So it's just going to pull right up and take it right there. And remember, it doesn't necessarily mean that this will hold, but the computers engage. If you notice exactly to that 50, they started to engage. What that wick means is that, so if coming back here, this is the open for this candle. They sold it down. This is where most of the volume took place as far as selling on that candle. They tried to push it down to the 50. This computer algorithms engaged. They pushed it back up, closed the candle there, comes over here. They tried pushing it down again. Computer algorithms are still kicking in and buying, comes back up. And so now those computers are targeting the negative 236. Doesn't necessarily mean that they get there. It could fail. This series could end because you have a larger measured move. Why is that? That needs to be there. So you could have a large, this is going to bother me. I got to fix this. You could have a larger measured move that's in play that overpowers the smaller ones, because what's going to happen now is whenever it pulls back, or it might have already done this in a smaller time frame, but is they'll be looking to sell. So as price comes back to this smaller 50, they'll sell there and work its way down. But anyway, I digress. I could ramble about computer algorithms for hours. What I am looking for is another measured move for the C down. And so just thinking about this logically, with the low volume node being here, and where is it? There it is. Knowing that the most likely extension in Elliott wave for a C leg is 100% the length of the A, right? So we measure down A, project it from the B. That would give us a target of $26.82. Okay. Now, what else do we know about ending diagonals? We know that we talked about in the last video, I showed how the volume has been decreasing across the span of this ending diagonal. That shows us more confluence, that gives it more probability that this is indeed an ending diagonal. We have overlap of the first wave and the fourth, which you want to see in an ending diagonal to validate it. The waves are smaller, so your third wave is shorter than your third. We know that our fifth wave will be shorter, or it has to be shorter than the third in order for it to be a valid contracting diagonal. We know that it's very likely on the fifth of an ending diagonal, you will see a spike in volume and a wick through the trend line created by the first and the third wave. So thinking about that spike, that shows confluence in the low volume node on the daily, because if you do get rejection on a low volume node, especially a big one that's on the daily, typically what you're going to have is you're going to see a candle come down. The candle will probably close there, but you'll have a wick that comes through, touches the target, goes through that line, but it's immediately rejected because it's a low volume area. There's not much price acceptance below that area. So people immediately start buying because they know that's a good price to be buying at AMC. So I think if this count is valid, what will happen is we'll come down here, right? So we're putting in our B. I haven't counted the B, so I don't know whether it's done yet. It could chop sideways more or put in a little bit higher high here. But this is what I'm expecting. I'm expecting a move down to complete the, hang on, I gotta adjust these. Be this one. There we go. Fifth, C of the fourth. So we come down here for the C. I'm going to put in a little confluent zone to know kind of roughly where prices could end. So we know we have the target, the negative 236 here. We have a larger negative 236 target here. We have the 100% target here. So what I'm going to do is I'm just going to come in, start right there. I'm going to go down to the larger negative 236 and draw a confluent zone, meaning that we have multiple targets on the algos, two different targets for algos. We have the projection for the C leg being 100%. So this is a very high probability zone for the fifth of the ending diagonal to end, which is price range of $27.67 to $25.90. But that's pretty much it. I don't really have anything else to say as far as updating. I've only really been doing a lot of videos on AMC because it's mostly what people seem to be interested in. If you could do me a favor, go ahead and drop a comment as far as what other assets that you would like me to take a look at, do some analysis on. Let's try to stick to equities though, because equities, crypto markets are mostly what I trade when it comes to this type of thing. I do day trading with futures, but I don't really like to go through analysis of that. It's a different type of analysis reading that type of price action for day trading, so it's just completely different. Yeah, so go ahead and drop some comments, like, subscribe, all that yada hooey. I will probably not do another AMC video until see what happens on Monday, maybe Tuesday. But I'll probably try to get another video out before the weekend. Just depends what's going on with the puppy. I know he's a handful. He's a sweet boy. He's an Australian Shepherd, and his name is Thor. He's very sweet. All right. Well, y'all take care. Bye.